Hi, this is Jack from Alpha Charts. Today is Saturday morning, April 4th, 2020, and we are going to do a state of the market video. Before we get started, this is not a recommendation to buy, hold, or sell any stock or security. This is for informational purposes only. I may hold positions in some of the stocks mentioned. Know your time frame and risk tolerances. Okay, starting with the SPX. Let's go ahead and just look at the most recent price action here. Obviously, everyone knows about the big down. We came up. This is just a retracement within a downtrend, and now we have rolled back over again. All the moving averages are still turning down, moving down very sharply. So as of right now, in my opinion, no signs of a bottom is showing. You do have a low here, which will be important. Likely scenario, I think, is that we undercut this low. I think that this 2100-ish area right here, this is the area that I'm looking for to potentially be a bottom. Again, it all depends on the process, right? And we don't know the process because, if we break this area, the next drop low is very far. So this is the area that I think is potentially likely to hold. But we don't know. Maybe this area does. Maybe we make a higher low here. Could be. So keep an open mind. One of the things that I've noticed also, if you look here, look at the volume, how it's just kind of dropped off. So that's something that's interesting too. It's still elevated, don't get me wrong, but it's not like this. So I'm just kind of watching that. First area of interest will be this 2300 area. Second area of interest will be about 2100-ish or so. Maybe looking for momentum divergences and depending on how the process takes, maybe these moving averages will chop around down here for a little bit, give them time to kind of bottom out and then turn back higher. We will see. The Qs, long-term trend is still intact, so that's a positive, right? We this little breakout here, we busted down, then went right back into it. So in my book, it's still intact. Moving averages are all moving lower and now crossing lower. So still a bearish scenario. Don't get me wrong. I liked this as a bear flag. And it worked out pretty good for me this past week. I'm not holding many things over weekends just because of headline risk. So I did sell out all my shorts already. But we went right back into overhead supply and then broke down again. Kind of what we'll call it expect. But again, volume, right? Look at the volume. Just falling off a cliff right here, which is kind of interesting. Maybe that's a positive sign for the market that the selling volume is slowing on this side versus that side. We'll see what happens. We'll see if this channel matters the next time it gets tested, if it gets tested again. All right, IWM, by far the weakest of all of the indexes, and this area has been important, but again, don't be shocked if we undercut it and get down here in this 83 to 85-ish range, right? That's another, 16-17% lower, something like that. That wouldn't shock me, right? Look how stretched they are from the moving averages too. That's interesting. So anyway, but yeah, right now 95-ish is important, and then underneath that 85-ish. So that's the areas I'm watching for the IWM. Again, by far the weakest, which kind of makes sense with the coronavirus hitting home so hard and everything shut down. They are mostly domestic, smaller companies, and so that is that. Dow Jones Composite. These are some of the big boys, and now, this area was interesting because we broke below it and then popped right back up. Kind of similar to what the Qs did in violating an important area and then immediately reversing. nice positive action right there, actually. Can we come back and maybe make a higher low here? Maybe this will hold this time, 6,300-ish. Maybe. Again, volume is dropping off, something that I've noticed across many indexes. So we will see on that. Moving on to the financials. I mean, they look pretty rough. They're making multi-year lows, right? Multi-year lows, and came down. Similar look to most of the other ones. We lose, we make a new low here, and this can go a lot lower. This 1750 level, that's important. If not, we could go down maybe to 1300. We'll see. But that's not looking good. We don't like that. SMH. Now, SMH is interesting because, they're not doing well by no means, right? We have a big decline already in them, from peak to trough, roughly 37%, maybe a little bit more, right? We do have all those crosses. Everything's moving over. But the 100 level has held, and that is my super duper important level, right? So let's go here. Going back to 2000 highs, this is the level, right? About 100. Now it's holding. Again, a lot of distribution going on, obviously, on the weekly. But as long as 100 holds, I'm optimistic for a more favorable outcome in the markets. And maybe that we do start to put in bottoming action, like in SPX, maybe we come down, maybe we do retest this low, but the SMH holds that 100 level, right? Well, then with a momentum divergence here, again, putting the pieces together, telling the story of the market, that would be a very positive outcome in my opinion. So that's kind of what I'm looking for. SMH to hold 100, us to, I hate to use the word retest because I feel like everyone's saying retest, but I don't think it's this low that I'm worried about. I think we undercut it and everyone starts to freak out. And I think this is the level to really watch for. Lumber, let's go back to the daily chart. Rolling over. Looks like a lot of the markets kind of moving in lockstep, so we're not getting a signal from lumber yet. If I start seeing lumber outperform, that would be a signal. But like everything else, we have levels, right? This is your level. Lumber breaking $39, that's a problem. An undercut and a quick reversal may be a positive. So again, follow the action, right? No guesses. Okay, so the equity put call ratio. We are basically at 1, right? So this market is whipping around and has people that are bullish and people that are bearish, and no one knows what the hell is going on. Again, my level I'm interested in is up, 2-ish. Once I get to 2-ish, that would be my sign that, okay, capitulation is potentially in. We get above 2, anything in between 2 and 3, and I'm getting really, really bullish. Again, that's a capitulatory move, and I think that would be healthy. Right now, we just don't see it. So one more big flush lower kind of makes sense. Looking at copper futures versus gold futures. I've been watching this chart for a while too. And you can see that we broke down 2 multi-year lows in this ratio, right? Boom. Broke down the multi-year lows, and we kind of came back, retested the area, and now we are moving lower. This turning back up above this area right here, the shaded area, that would be a positive for the market. Right now, it is not doing that. Looking at credit spreads, and here we go. So they're widening again, right? Not what you want to see. I'd like to see maybe a lower high be put in, and then for them to roll back over. Right now they're widening, and that's not a healthy market. The bond market's still saying be careful. Again, another reason why I am still tilting on the bearish side and being very cautious. SPX versus the VIX. right? So this is a chart that was really interesting too. Let's take a look at this, and let's go to the weekly time frame, okay? And I'm going to compare it to the SPX. So I'm doing the ratio compared to the SPX, right? And there's the weekly time frame, and I do that right. So let's do that one more time. To VIX, compare, SPX. Thank you. Done. Okay. So here's some interesting things. If you notice that we had a divergence here while this was going lower, right? And we had a divergence here while this, right, divergence while the S&P was still going lower. And if you look at it here, again, a divergence right there, S&P was going lower, right? But the SPX VIX ratio was going higher. So now what do we have here? Right now, no divergence, right? So that's something else I'm looking for. I think that's kind of an interesting dynamic that shows, obviously SPX would be outperforming, VIX would be coming down, and you would expect that the relationship chart would show that divergence before that you see it in the actual SPX itself, okay? Again, there's a weekly chart. I mean, so even if I go to a daily chart, it shows up in the daily chart too, right? Again, we're not seeing any divergence here yet, right? No divergence here yet. So again, another reason why I think SPX rolls over, but you'll see it, here it was still made lower. It was still going lower here. It didn't bottom. It started bottoming, if you notice, here. See the divergence? Boom. Divergence. So that is something I'm watching too. And again, just one more piece of the puzzle, one more potential signal. So value line geometric index is, we don't need that SPX on the bottom anymore. Yeah. So stocks are still taking on the chin, right? All stocks. It rolled over. We'll see what happens when it gets down here to 305 again. But again, nothing really that positive, right? Something that I did notice this week is staples. Staples are outperforming. So even though, and listen, there's some technology names that are doing okay too. I get it, but this type of change of character right here is something I take notice of. And so I'm looking for opportunities in staples. Technology also looks good. Don't get me wrong. But I think that's a harder play right now, even though it's a beautiful uptrend, right, versus the SPX. But when you look at it versus the Qs, it's not quite as good. So staples is where I'm focused on again. And if you look at what's open right now, grocery stores, pharmacies, people selling food, right? That's where people are spending money. And if they want to spend money, they're either going online, and Amazon, and Amazon, looks pretty good, right? Holding in there at least, but they want to spend money. And so grocery stores are doing well, right? And there's Kroger with a nice little double bottom breakout. I own this one, and Walmart is another one I bought this week. Again, doing well. And they're both large, some of the largest grocery stores out there. All right, so I'm going to leave you with one last thing. Here is from Johns Hopkins, right? And here's the COVID-19 map. And let me, I don't know if I can move this around or not. Yeah, that's fine. Anyway, so the curve. Again, this is a logarithmic scale, right? A logarithmic scale. And what we're seeing here, we are seeing, hopefully, a flattening of the curve, or at least a start of a flattening of the curve. Now, again, it could go straight up here, but that's optimistic, right? That maybe we're starting to flatten here, and maybe things are starting to get a little bit under control with this thing. Further flattening of this would dovetail into, one more flush lower, further flattening of the curve, SMH holding up. Again, all of them are pieces, right? Lumber holding its lows, and we put all those pieces together, and the market tells us a story. And we're here just to read that story. Hope everyone has a great week, and good luck. Stay safe.